Hello guys and welcome to Money Journey. Today we are doing a stock analysis of Amazon. We are talking about the company and if Amazon stock is a good investment for the next years. So let's start. Amazon traded at an all-time high of $180 in 2021 after the pandemic boom, and now is trading around $98. Their, their market cap is $1 trillion and they are trading at a P ratio of 90. Really huge. If I didn't follow the company, if I didn't knew how the company operates, I will immediately exclude this company because it's a huge PE. It will never be a good investment, but you need to look at that differently because Amazon is not a company as the other ones. Maybe it's not it's difficult to understand how Amazon operates, and you shouldn't evaluate Amazon about only about this PE because it's really high, but they are investing in their future. They are investing a lot, and they are not focusing on profitability. So they are trading at the forward PE of 60, price to sales of 1.90, which is really high for an e-commerce. But Amazon is not an e-commerce company anymore. They have a lot of tech. They have other business, and where we will talk about. Their compound annual growth rate of the last 5 years is around 28%, which is really high. They are growing a lot. Their gross margins are on 43%, which is good, but their operating and net margins are around 2%. That's because they are expending a lot of money on their business. They are trying to grow at a really high pace, so they are investing a lot, and that's why their margins are really low. Their balance sheet is good. I would say that they have a lot. They are 58 billions. Their debt is manageable, and their return on invested capitals are around 10%. It's not good. It's around the average of the market, but they are investing a lot, and they still need time to show the results of their investments. So their performance this year and 2023 have been outstanding. In the first 2 weeks of the year, their stock price increased almost 17%, which is really awesome. They are trading now around $100, and they have been trading close to 90s and on the 80s for the last weeks. And let's see, their shares outstanding over the years have been increasing. They have a lot of stock-based compensation, which is a negative point for the company, and one thing that I don't like on the company. So let's do a revenue breakdown. In the last year, you can see there's something I want to talk about. I love their AWS, which is the cloud segment of their business, and their advertising service. They have these two businesses which are making 93 billion. They did 93 billion dollars on 2021. These are two business with high margins. If you compare that to Microsoft Cloud and Google advertising, they have margins around 30%. And these two business on Amazon, AWS and advertising service, is growing above 20% per year. If you want to value only these segments, AWS and advertising will do almost 120 billion in 2022, and maybe 150 billion in revenue for Amazon in 2023 if they continue to grow at 20% per year. So if you use 30% margins on 150 billion, that's 45 billions of earnings for Amazon in 2020 on this year. If you can predict that, just imagine. If you assume a P of 25, if you talk about a business that is growing above 20% per year and with high margins, as this business have, we can assume a P of 25. If we multiply 45 billion earnings for a P of 25, we have a 1.125 trillion dollars of valuation. Now Amazon is trading at $1 trillion. So you can be buying only AWS and advertising service at this price of Amazon, but can think like that. You have to have do due diligence and explore that. So let's talk about Amazon, their moat and competitive advantage. They have a wide moat. They have a lot of prime users. If we talk only about e-commerce, I love the company. They are still growing a lot after all these years. Their revenue growth in the last 5 years is around 28%. Their return on invested capital is on the average of the market, and it's not bad, but we prefer above 15%. But let's focus on the rest. Their debt is manageable. Their free cash flow has been negative in the last year, but they can have free cash flow positive easily. They are just investing in their future, and it's normal. One thing I don't like, it's they don't return capital via dividends and buybacks. They don't have dividend, they don't do buybacks, or if they do, it's really small, and their shares outstanding have been increasing, and they are diluting the shareholders. That's one thing I don't like it, but they are not focused on profitability yet. So, and fair valuation, let's talk about that now. I've done a discounted cash flow for the next 10 years. Our base case, it's around, I think they have been growing above 20%, so it's gonna be difficult to keep that rate. So I think they can, on our estimates, I think they can grow at 16% for the next 5 years and 10% after that. A company like Amazon deserves a premium. I'm not doing a big premium because of their margins. I'm doing just a 16 PE. But the most difficult thing to talk about Amazon is margins. They have high margin business like Amazon and advertising, which is getting bigger and bigger, and getting a bigger part of the revenue, so their margin can increase. They are not trying to be profitable on the e-commerce and on the third party sellers. So if they try that, I think they can have margins close to 20%. So I'm assuming for our base case 15%. I want a discount rate of 12.5%. It's the minimum I would like to get if I invest in a company. So if we use that if we assume that PE, that growth rate, and that margin, I think Amazon on our base case is around $112, which is above their price. For a bull case, I'm assuming 18% margin, 18% growth in the next 5 years, 12 in the rest, 18 PE, some premium, and I want, if they can achieve that, I want a discount rate of 15% for my investment. So if you assume that, their intrinsic value at the moment, it will be $155. I know it's difficult, and they need to focus on profitability, but I think Amazon can do that. They are not trying yet. They are doing a lot of investments, and we haven't seen the returns on that, and if they continue, I think Amazon can be a good investment for the next year. So in our bear case, even if Amazon only grows for the next 5 years, they can grow their revenues only at 12%, for the other 5 years 8%, PE of 14 only. Their margins will be only at 12% after they try to be profitable. It's our bear case. I think they can achieve that easily. Amazon only, if you want only 10% of profits, we can evaluate Amazon now at $71. It's not at a good value, but if you watch at Amazon, we think Amazon intrinsic value is around $112. I think we have a cautious approach. We need them to work on profitability because they are not trying yet. It's not like the other companies we see in the S&P 500 and the Dow Jones average. Amazon is, we can say they are still in growing mode. They are not trying to be as profitable as they can, and they still need to work on that. But I believe Amazon will be the biggest company in the US market, is a prediction. Maybe it will take 1-2 years, but I think in 5 years they will be the biggest company in the US market. They will have the biggest market cap because they have a lot of potential. So let's review our stock. They have a big moat, a wide moat. Their revenue is growing a lot, and they still can continue to grow. Their ROIC is average, but after all that investment, they can still show and improve their returns, and I believe in that. Their debt is manageable. They having free cash flow positive already, and they can still increase their free cash flow. They are not returns capital to the shareholders, as they are diluting us, but they can turn around as they focus, and they have a fair valuation. We have still their actual price is around $98, above our value of $112. I'm a buyer of Amazon under $100, in my opinion. I think it's a good investment. They've been trading around $90-$80, which I think it's a really good price for Amazon. I will be buying, I hope I can buy more Amazon stock on this year, and I hope their price is going down during this year. I think it will be difficult in the next quarter for Amazon. They still need to focus on profitability and increasing shareholder value, but I think they can do it. So that's our stock analysis for today. I hope you liked it, the video, and I hope you find this helpful. So if you find it helpful, like and subscribe. Bye.